For joining us this evening, NAHREP, North New Jersey. We're going to take a couple minutes to allow everybody to join us. We're really pleased that you could be here. We're very excited tonight. We have Chris Whalen, a CPA with us, who's been a veteran CPA for about 30 years now. And we have James Cotto, our Morgan Stanley national partner, who will be helping us understand how important it is to think ahead and build wealth effectively, not to be afraid about investing in the stock market. We really do need to think ahead. We're all independent contractors, and I know a lot of us think about the here and now rather than focusing on the future. So we're really excited to have everybody join us tonight. While we're waiting, I want to take a moment and thank our annual sponsors. Without them, we would not be the chapter that we are. First of all, I really want to thank our newest partner, Juan Torres with EMM Loans. Thank you, Juan, for partnering with us, and we're super excited to have you with us. Again, thank you, Juan Torres. And I would be remiss if I did not mention all of our fantastic annual partners and sponsors. We have Brinks. We're really grateful to Joe Manzo of Elite Title, Exit Realty Group, Family First Funding, the team, Chris Keelan Group, Citi, Commercial Mortgage Depot with Enrique Gomez, First Equity Loans, New Jersey Lenders with Iselina Kirchner, and of course, PRMG. So we're really excited, we're thankful, and we're looking forward to a really great remaining of the year. I know these times have been very challenging for all of us. I, more than anybody else, would rather see everybody live. We all know that that personal connection is missing, but God willing, we hope that we get through this pandemic safely and healthy, and we hope to see everybody in person very soon. So today's topic is about building wealth. And by building wealth, one of those nuances have to do with optimizing tax opportunities and benefits. Now, we all know that we have to pay Uncle Sam, and April 15th is around the corner. Many of you may have already filed your tax returns, but pay close attention to our next speaker, Mr. Whalen. He will be discussing some very interesting and new tax deductions that have come up as a result of COVID. If you feel like there's something that Mr. Whalen has presented tonight that you may have missed, not to fear, because you can always file an amended return. We hope that we'll be able to help you salvage some valuable tax dollars, and that way you'll have more disposable income so that you can use that to effectively help build wealth. So without further ado, I'd like to bring up Mr. Whalen. Chris? Chris, thank you so much for joining us. Chris, you have to unmute yourself. Okay.
Can you hear me?
Thank you so much, Chris. Yes. Thank you for your time tonight, and thank you for the expertise you're about to bestow upon us.
Yeah, there's a lot of things that people might not know, some new things and some other things that might be missed, especially if you do your own returns or some other preparers. So I've really tried to prepare a nice, concise list of things that will really help you to save as much on taxes and really just maybe inform you a little bit. A lot of people do their taxes, but they never really know a lot about the forms, right? So I'm going to try to impart some information, give you a little bit more control and clarity on things.
By all means, Jane, why don't you begin? I mean, Chris, why don't you begin?
Okay, good. I'm going to share my screen. All right, everybody. So I'm Chris Whalen, CPA, and I have a full service CPA firm. Most realtors know me in the state. We're business and individual tax experts, been licensed as a CPA for a long time, and always offer a free consultation. My main motto is if we aren't working for you, then you aren't working at your best. You're almost there, Maria, but you need to hire us to get to 100%, right? Yeah. So we do a lot with real estate brokers and agents every day. Just take a look, investment property strategies. We go beyond the forever homes a lot in what we do. tax benefit analysis for clients, opportunity zones, and 1031s. We're going to touch on that today. So I really urge everyone to get my phone number in your phone. If you have a client meeting, or there's something that may goes beyond your normal selling of family homes, you really want to get me on the line. We do a lot of this work and I really love it. So I often say there's Q&A throughout, but hopefully I'm going to give you so much A, there's very little Q. That's what I'm hoping for by the end of this, right?
Folks, if you have any questions, you can put them on our Facebook Live chat and also in your Zoom, if whoever's registered on our Zoom link. So feel free to ask questions as we go along.
Yeah, I have the
Answer them
chat.
after.
I have the chat up too here in case I see something. So, all right. So your clients have tax questions, but you're not tax experts. All right. So what do? How should you handle this? Well, of course, a seasoned CPA can analyze the tax impact for you. If you don't have one, let me refer one named Chris Whalen, of course. But that's the end of my marketing. Okay. So as Maria alluded to, you have 3 years to amend a return. If you feel there's a mistake, or we can go back if there's some deductions that we missed. I urge everyone, after hearing me tonight, to really take a look at your prior 19, 18, 17 returns to make sure nothing was missed, because your Schedule C income is very highly taxable, as we know, with self-employment tax and ordinary tax. So we want to go back and look at those. And there's sometimes we find things missed, and we can amend the returns and get the money back for you within 3 years. Very important point here with real estate agents. A real estate agent cannot form an LLC or an S Corp to run their business through. It goes against your licensing regulations and rules. So very important. If you do have one and you're filing at the end of the year, you really can't do that, because you possibly could lose your license. So a lot of people don't know this. So I like to impart that when I can. Now,
That's important.
So let's talk about this new form 7202. It's brand new. And what it is, it's a credit for sick leave and family leave for certain self-employed individuals. And this was meant to give people a tax break and a credit when you've had to not work as a self-employed person due to COVID for yourself or for a loved one. Okay. Did someone just ask something? Did I hear something? Okay. So what does this form do? Well, there are 2 new coronavirus tax-related credits for self-employed people, and these are based on your net self-employment taxable income on your Schedule C. So the first one is the credit one for sick leave for you, right? So this allows you to take a credit for up to 10 days during 2020 that you missed work due to coronavirus. What's nice about this is that the list of reasons are somewhat vague. So I'm urging everyone to take the 10 days on this form. It's going to give you a serious amount of money of credit, and put 10 on line 1. This is the form, and it simply shows you line 1, the number of days you're unable to work basically is 10, right? So to give you an idea, so let me go back. Sorry. So this is part 1 of the form, the top of the form. Make sure if you're self-employed with positive income as a realtor, you add this form to your tax return, especially in TurboTax. If not, you're going to miss out. Credit number 2 on the same form is for family leave. So this relates to time taken off to care for a child. This allows up to 50 days during 2020 that you missed work due to coronavirus shutdowns of schools and childcare. If you missed work because your child was remote learning, that qualifies. So the important thing about this is that for both of these, you did not have to be, you did not have to have COVID officially. You just had to be inconvenienced, and COVID had you miss work. So no one in this instance actually had to have COVID. You just need to miss work due to COVID. So I'm urging everyone with a child under 17 in 2020 to put 50 days on line 25. Okay, that's going to give you another substantial credit that's based off your net Schedule C income. All right. So the next thing I want to talk about are PPP, SBA EIDL updates. A lot of you got PPP loans and EIDL loans, but I want to go over some of the changes in the PPP number 2. So most independent contractors, such as realtors, should apply for number 2 PPP ASAP, right? So for those that don't know, it's the Paycheck Protection Program. And what they gave you was a certain percentage of your Schedule C net income as a loan, a forgivable loan, right? So it's something everyone should have tried, the first PPP loan. Now, in order to get the second PPP loan, you have to show that in 1 quarter from 2019 to 2020, you had a 25% reduction in income. Many of us had that in the 2nd quarter. So you want to look at year over year, get your commission statements. And if you did have 1 quarter where we can show a 25% drop, you really want to apply for the second PPP because that's forgivable money. It's free money and not taxable to you at all. So if you have any questions, please get my information, write to me. I'll help you look at your 2019 and tell you what you can do. Now, the EIDL loan is still available. That's the Economic Injury Disaster Loan. That is a loan. It's not forgivable, but it's a very low interest rate that can be paid over 30 years. So this gives you a nice cushion in the bank. You don't have to use the money. You could always pay it back, but I urge everyone to look into this. It's very simple to do. It's based on your gross income from 2019, and it's well worth it to get approved and have it in the bank. Again, there's no prepayment penalty, so look into that. Remember, unemployment is really no longer available like it was last year, the way it was. So if you're having trouble on the state system, there's a reason for that. The unemployment is no longer available to file a new claim. They might create it again. They might open it up again. But if you're having trouble, that's why. So reminder number 1, did you get a PPP number 1 loan last year and unemployment? You can only keep one. Remember, you can't keep both. If you have a forgivable PPP loan of any amount, you have to give that back or the unemployment back, whichever is the lower number. And they're going to check on this, so be careful. People don't know this, but that's really the rule. So look at the amount of money you got, whichever was higher, keep that one and give back the other money. Eventually, they're going to ask you for it, most likely. A lot of people don't know this, and I don't want them to get caught a year from now without any money or enough, and the government asks you to pay one back, right?
That's really important, Chris. I didn't know that either.
Reminder number 2, PPP loans are not income. So many people, many realtors, now I'm going to back up a little bit. I know that these realtors that are involved in NAHREP always have a separate business account for their business work. They never commingle anything, right, Maria? They never put money in the, never. So this doesn't really apply to them, but many people had the PPP loans deposited into the account that they use for business. Now, don't mistake that for income, right? Many accountants just add up deposits and say that's Maria or Chris's income for the year. So be very careful to pull that out and see when it was deposited, because we don't want to pay tax on it. I've seen that a number of times already when people call me to ask, Chris, is this return right? I had done, and then I see they included it. So be very careful to see what account was your PPP loan deposited in, and make sure you don't include it as income.
Chris, would you say when I got my PPP, I opened up a separate account. So I found that was easy, especially when I had to do my application for forgiveness. So that's not a bad idea, would you say?
Right. No, that's a great idea. And if you, realtors, if you have a business, an account, a personal account that you're commingling everything, please just open up another account in your name. The bank doesn't need to know that it's a business account. Have all your money deposited, pay your expenses, and then move your net money to your personal and pay your personal bills. It makes it so much easier to account for it monthly and quarterly and annually. Very, very important. Okay, so remember, I've gone over this before, but not with you guys. Want to put all the applications in and wait for responses, right? Don't forget that these applications are very simple. So sometimes at the back end, the underwriting takes some time. So I want you to remember, like the SBA loan is very small, is a very small application, but it takes some time. You have to give normal information to get approved. So, and PPP forgiveness is limited sometimes. As soon as you're approved and receive any funding, be sure to call me so we can look at, because they're going to want you to sign forms and promissory notes that say you officially want to take the loan. I urge everyone to let me or your CPA review the paperwork before you do that DocuSign. Always good to have one more set of eyes on it before we obligate ourselves. So let's talk about the pass-through tax breaks, or the qualified business income deduction. A lot of people don't know about this that do their own taxes. So Trump made a plan that if you were self-employed like us, you could get a 20% deduction on certain business income. Realtors qualify for this. So it doesn't apply to rental property profits, but it can, right? So the takeaway from this is most real estate agents will get a 20% reduction in their taxable income. This doesn't affect your self-employment income, which is a separate calculation. Very important to remember that, because some people do take it on both and then they owe a lot of money. Okay, so I made this little chart. Let's go through. It's very important to go through it a little bit. A single person with no children makes $100,000. We have a realtor out there. So the old calculation was $100,000 income, and we have a standard deduction of 10.4. It gives us taxable income of 89.6. Now let's stop there. Let's go to the top of the new column. Same income, but now we get $20,000 off, 20%, less a new higher standard deduction. Our taxable income is only $68,000. So take a look. Our income tax, with nothing else being different except the new rules, we only pay $10,899 versus $18,139. That's a real savings. Now go down to self-employment income, though. That's where you pay the 15.3%. Please notice that's the same, 15.3. So our total taxes with the new system is $26,199 versus $33,439. So we save $7,240 with the new method. So you want to make sure you're taking the QBI deduction. As you can see, a lot of people miss it. They don't understand it. So I want you to focus on these things when you're doing your taxes, or especially when you're reviewing your taxes done by someone else. Don't just sign these. As you can see, there's a lot of things to look at before you get to know your tax return. Very important. All right. So Biden's the president. Will he reverse Trump's tax cuts? Right? We've heard that lately in the news. He said he will. What if he takes away that QBI deduction? That $100,000 realtor suddenly has a $7,000 tax bill. So how does this affect you and your clients, which is why I'm doing a lot of these seminars? So tax rates and margins will go back to Obama levels. That's about a 15% increase. Homeowners can afford less. So you now can sell a smaller house, right? Think about it. If he changes the taxes retroactive to January 1st, 2021, then the people you're talking to now, you can't use their 2020 net income. Their net disposable income is going to be lower. So people that are on the fringe just getting approved, we got to be careful, because next year they won't be able to afford the house we sold them, right? Very important to remember that. So even approved today, they may not be able to afford it. So we have to be very careful when we look at their ability to pay. When Biden starts changing things, we need to do a projection based on the new rates to really see what they could be approved for, to protect the client, right? Because we're not all out for profits. We're here to take care of the client's best interest. All right, so I urge if I was a realtor, I would never sell a forever home. I would only look at investment properties to sell, because they're ignored, right? And it gives us a far-reaching base of location to sell from. You know, why compete with the cutthroat forever home sales, right? We're dealing with that, right? So it's a much wider range of territory. I'm not looking in Monmouth County or Bergen County or Essex County. I can look at a 150-mile radius, right? I have eager buyers with cash. People walk in my office and say, Chris, I inherited $300,000. What do I do with it? Well, I can put it in a mattress. I can put it in gold. But no, we can buy investment properties. So you need to be poised to be able to talk that language. It's a completely different sell than selling to a family. Investors want to know, what's my bottom line? And they want to know what you're going to do with the 300,000, right? It's much easier to sell the financial benefits than forever home attributes, right? Forever homes, we have to talk about cul-de-sacs and schools and granite countertops and neighbors. And I just have to sell to an investor, how much is the ROI and how do we get there? Much, much easier, right? The other good thing about investment properties is that it doesn't matter if they increase in value, right? I'm never selling it. I'm getting it for the cash flow. Very important concept, which seems counterintuitive. But when would I ever buy real estate when I don't care if it increases in value? Well, this is when you can, right? And it always beats the market long term. So remember that. No matter what, even realtors don't know that the real estate is much better than a stock market investment, much safer than stocks. Okay. Now, do I have just another minute to talk about this? Yes, is okay?
You can finish wrapping up, Chris.
Okay, great. So all I want to talk about is 1031s, very important. You have a property that someone wants to sell, a commercial property, and if a client does not need the proceeds from the sale, consider a 1031 exchange, right? That will allow you to move the gain to the new property and not pay the tax now. So again, but a client cannot take any proceeds from the sale. I just want to, we should stop sharing for a second. And let's see. What other thing? I want one other thing to talk about. I want everyone to remember that if you haven't been investing in a SEP IRA for yourself, remember, when you get your taxes done, ask your, let me do that now. Let me share that now. That's good, right? You want to ask your tax accountant to calculate a SEP IRA. It's not a regular IRA limited to 6,000 or 7,000. You can put away 25% of your net income and take it as a current deduction. So that's something to really, a lot of realtors don't realize that. All right.
Net income, Chris, or gross?
Net income. All right. Hope you found this worthwhile. Please email me your contact info. And do we have any questions?
I don't see any questions in the chat, and I believe we don't have any live. Well, Chris, I'm sure if anybody does, you've given your contact information, and I encourage everybody to contact you. Thank you
That's
so
great.
much. This was incredibly informative. Thank you, Chris.
Oh, thank you. I just try to be effective. I hope everyone thought it was worth their while.
It really was. Thank you so
Really
much,
helpful.
sir. So now that we've heard how we can maximize our taxes and have some more residual income as a result of Chris's knowledge, we're going to move on to our next featured panelist. We're really pleased to have Mr. James Cotto from Morgan Stanley, who is a national partner of ours. James embodies the NAHREP 10 principles right here. And I'll never forget the time that I first heard the NAHREP 10 in Washington, D.C. 6 years ago. And I was awed when I heard the 10 principles. And I'm trying to make them my 10 commandments, every single one of them, as everyone should. And tonight we're going to focus on principle number 5. It's about maximizing wealth and investing at least 20% of your income in real estate and in stocks. And as Latinos predominantly, by and large, many are fearful of investing in stocks. And Mr. Cotto is an expert. He is the managing director of wealth management over at Morgan Stanley, and he has a dynamic team of individuals behind him who can help us all learn how to properly manage and plan for our future and maximize our wealth. Thank you, Jim, for being with us today.
Thank you so much for inviting me. I appreciate it, Maria. Hi, everybody.
Thank you.
So to give a little bit of background about us, Serena, if you could take us to slide 2, please. Okay, actually 3 would be best. So I had a team that's in the headquarters of Morgan Stanley's Global Wealth in New York. It's a team made up a very diverse team. 5 of us are Hispanic, 5 of us are women, and we are dedicated to, among some of the things that we do, is dedicated to the American Latino space. And that's why when Gary, my good friend, told me about the Hispanic Wealth Project and NAHREP and the great work that he was doing there, I was like, I have to get involved. Gary and I know each other from Latino Donor Collaborative. We know each other from Latitudes. We share many of the same friends. I have a tremendous amount of respect for him. I stalk him on his blog. It's a whole thing. And what I think is interesting is what I always feel when I meet people such as Gary and many other people that you would know is the core commonalities of the American Latino: family, faith, entrepreneurship, economic empowerment, and philanthropy. I find it very interesting, although I meet Hispanics all over the country, like we're all very similar when it comes to our core values. You could go, Serena, next one. I put this up here because it's very interesting. My father always said, it's the 4 F's in life. It's fitness, family, finances, fun. You know, if you're not taking care of yourself, you're not going to be able to take care of anybody else. As Fidel Vargas says, if you're on the airplane, put the mask on yourself first, and then you can help everybody else. I think the second thing is family, because nothing more important to all of us is our family, whether it's our siblings, our loved ones, our children, our relatives. You know, there's a bit, Latinos have that core essence of really wanting to take care of, you know, their families. And then there's finances. Well, you know, finance is a very interesting thing. My father always told me, if you're not taking care of your finances are going to overwhelm you. And honestly, it's tough to take care of your family without the appropriate finances. And then fun, as he told me, he always said, kid, you're not going to have any fun if you don't have the other three in line. So, you know, he's like, it'll always make it. You look at these NAHREP 10 and you read this, and I'm just like, my God, this is exactly the way my family, my parents have told me to live our life. And I actually shared this with my children, and they're like, Dad, this is what you do every day. I was like, I love this. Anyway, let's go on to the next one. So we formed a professional alliance. You know, I love the fact that the Hispanic growth and the income is outpacing anything else. I love the fact that the average worker is only 27 years old when non-Hispanics are 41. I love the fact that by 2040, 70% of home ownership is going to be bought by Latinos. I love the fact that if you take the GDP of the American Latino, we're the 8th largest country in terms of gross domestic product in the world. You know, I just so much compelling data that's put out by the LDC as many other places. And I, you know, was one of the reasons why, you know, I really wanted to focus on this, because I wanted to give back to our community. Sometimes I felt like I got lost in terms of making money and, you know, raising my family and stuff. And now that I have the opportunity, I'm blessed to be able to do things like this. I'm so excited that NAHREP and Gary has allowed us to become partners. And, you know, I also believe another thing. I think with the narrative that's going on in the world, and especially in the United States, that, you know, Hispanics need a louder voice, they need a larger seat at the table. And I believe the only way for us to have the seat at the table is through affluence, because when you have affluence, you know, you have influence. It's like the old rule, the person who has the goal can make the rules. I think if we help each other build wealth for ourselves, for our loved ones, for our community, then we're going to have a larger voice in all things that matter to us. And I think that's important. You can go on, Serena. So it was one thing that Maria said that was very interesting, and it's actually in one of your the Hispanic Wealth Project. There's data out there that only 4% of Latinos actually invest and own stocks, and so we're only 18% of the population. So it's 4% of 18%. That means it's something like 1% of Latinos, 1% of the population out there as Latinos are investing in the stock market. Now, I agree with what Chris said, that real estate is a great investment. You can employ leverage, and, you know, it's fairly stable, and it grows, and you can act, you know, and you can, it's an income oriented product. But the one thing that the markets will give you is diversification away from that, if that's your primary focus of business, which I'm sure it is. And then the other thing it gives you liquidity, and you're able to leverage those assets, those investable assets, to do other things and diversify away and provide yourself peace of mind. Next slide, Sabrina. So when it comes right down to it, there's the 4 components that we look at it, which is asset management, wealth management, liability management, and enlightened collaboration. That's what we wanted to do when we came to say, hey, let's partner with NAHREP. What does that mean? You know, asset management for us, we want to help you grow. I'm a firm believer. You only want to make the money you make once. You want to make it and you want to keep it, and you want to grow it, but you want to grow it within your risk tolerance. You want to grow it within your time horizon. You want to make sure you're meeting your needs, but also achieving your goals. And I think that's important. Holistic wealth management is more like long-term views, planning for the future, planning for college, planning for retirement, planning for a second home, planning for diversifying your investments. One thing that we all plan for as Latinos more than any other ethnicity is planning for taking care of our parents. So I think that's really important. And then liability management, I'm sure you all know how to effectively deploy liability strategies in order to leverage effectively. We do that here as well. We take portfolios and we are able to leverage them in order for our clients to do that. Sometimes our clients want to be nimble and they want to be quick and they want to buy a piece of property now more than ever. We all know that. And you know, to get a mortgage in place It's just impossible. And then to go and sell something that last year did 15% to go and put into a property in order to close a deal when interest rates are at zero, you could borrow at less than 2%, isn't a good sound business decision either. So we create a lot of liquidity solutions for our clients, especially when they're looking for real estate opportunities. The Enlightened collaboration is just that we're a team of 10. We're connected within our community. We're connected within Morgan Stanley. We have a robust platform, and we like to know who you are, how you make your money, what's important to you, and see how we can help you. Yes, can we manage the money? Yes. Can we help you with wealth management? Sure. We have the expertise and the wisdom. I've been doing this for 30 something years, I'll admit to. And, we manage a significant amount of assets, in the billions. But to me, we don't judge anybody by the size of the money they have. We want to work with fellow American Latinos and help them grow wealth. Go ahead, Serena. So asset management all starts, to me, it's very simple. My wife tells me this all the time, luckily more when I was younger than I am now, which is, James, if you fail to plan, you plan to fail. And that's the one thing that we learn with our clients. Clients come to us all the time and they're like, I want to buy this. I want to do that. I'm thinking about buying Tesla. How do I do this? And I was like, let's just slow it down, because I don't have an agenda. Our team doesn't have an agenda. And we always say the same thing. Tell us a little bit about you. Tell us about your personal situation, how you make your money. What are your fears? What are your goals? Because what we really want to teach you through asset management is how to have a more effective relationship with your money. Money can cause anxiety. People who say money doesn't matter have a lot of money. That's just the reality. People who don't have a lot of money and have to make the differences of what I need versus what I want for myself, for my children, for my loved ones, those decisions are being made today in our community all the time. And we're there to help people do that. And I think that having a relationship with your money makes you sleep better, makes you have a plan, creates that uncertainty that you have that kind of gives you that anxiety and takes it out of the picture. Because if things move in the market and things move geopolitically and things are going on, if you have the plan and you have a long-term view, you're going to sleep better. And that's really why we start with it all the time. And then from that plan, we come with strategies about how to deploy the assets you have. And we silo those assets for different initiatives, whether it's home purchase, business diversification, business acquisition, retirement, college planning, taking care of our parents, whatever the case may be. We will silo the assets and investments to make sure that it's appropriate. It all fits within your big overall strategy. Next slide, please. This is an interesting thing because Chris touched on this, which is, hey, you should do a SEP IRA. What I've noticed with anybody I'm working with NAHREP is that many of them are coming to us because they do not have a retirement vehicle. And if you don't have a lot of disposable income, the only thing that I could really say, the one thing that I see with all our wealthy clients is they have huge retirement plans because they did forced savings at an early age in life, and those assets compounded to a significant growth. If you look at this slide, if you do $87,000 over a shorter period of time, I think it's at 40, it'll grow to 255. That's great. But if you save that same amount of time, started when you're 25, it'll turn into 811 grand. That is a very compelling slide, which is, when should I start a retirement plan? That would have been yesterday. But since yesterday is gone, today is the day. And you should all get on it now, because I'm telling you, with the amount of money for individuals we see, their wealth are in two things. Guess: real estate, retirement plans, and of course, their businesses if they're business owners. But those are the three components. Go ahead, Serena. This also takes the first slide, the previous slide, and tells you how long your money can last. Because the more money you have on a percentage basis, the less you're going to draw on it to keep you in the lifestyle that you've grown accustomed to while you're working. So if you start later and don't save as much, you're going to be taking a larger portion on a percentage basis out of that retirement plan to keep you in the lifestyle that you've grown accustomed to. Where if you start and you save that money over the course of time, you're just going to have a larger pool of assets. And the larger pool of assets is going to be able to extend. So that if you decide to hit the bid and retire at 60, it could last to 92. If you decide to start at, I see clients who are 55 that started working at 25 that are like, I'm retiring. I'm going into a second career. I'm going to manage my real estate. I'm going to golf. And the retirement vehicle, the IRA, the SEP IRA, the 401k, whatever vehicle you're using, will allow you to do that. I want to stress that because I've been doing this, like I said, for a long time, and that's where I see the wealth. Please, next slide. That one doesn't help me. Oh, it's popping out. Okay, I spoke too soon. So formulating an investment strategy and getting it all together, to me, this is something we do every day. We'll help you identify the target. We'll give you a realistic time frame. We're going to listen to you about what your risk tolerances are, and we're going to create an asset allocation strategy that's appropriate for you. Next slide. And the bottom line is, whether you use us or you access our expertise or wisdom, or you decide to go with somebody else, or you already have somebody that does this, please, listen to what we're saying and try to put this together for yourself, because that's what's really important to us. Yes, we would love to work with you, but if you're not working with us, please just, understand these basic concepts that we're bringing to you that you should be thinking about. But I also want to tell you something else that I didn't touch on. In our professional alliance, our team has decided to give back to NAHREP a portion of our fees that we earn with any client that we engage with. And the reason why we do that is we believe the great work that NAHREP's doing. We support the programs that are going on locally and nationally. And so we thought it was important. It's not going to raise anybody's fee to do business with us. It was just something that we thought was important. Holistic wealth management basically is exactly what I was talking about, which is you're going to have your financial plan. We're going to agree on what the goals are. We're going to make sure that if you're looking at the goals and they're realistic, because we're going to listen to what you say, and then we're going to repeat it back to you to make sure you understood what you meant and we understood what you meant. And then by setting those goals accordingly, we're going to be able to meet those needs and goals. Next slide, please. Well, this is always a good one. Having a relationship with money is avoiding knee-jerk decisions, whether it's, advising your child on what kind of college you go to, whether it's a public or a private, a 2-year versus a 4-year, and those things, where you get your first career. Everything's about choices. I actually had the pleasure of working with the Sean Carter Foundation. He walked into the room once when I was working with him, and he said, we're all on the same bus. You just need to know, be smart enough to know to get off at your stop. And I think a lot of those things that you look at this, avoid these knee-jerk decisions, it's definitely just making prudent decisions. So what our clients do, whether they're buying a car, leasing a car, buying a second home, doing home, work on their house, the basement, lending, giving money to their kids, lending money to their kids, they usually include us in those conversations because we don't really have skin in the game. We're just going to make the best decisions based on what you told us. And I think that's important, to be able to have somebody that you could bounce those ideas off of. Because what I find is, even myself, that when I'm too close to the situation, sometimes I lose perspective. So it's nice to have the team around me to help me think things through when it comes to all these decisions below that are very important. Next slide. So it's you to get now. So, you could just pass that slide. That really covered that, Serena. Thank you. So this is one thing that we really believe too, which is we deal with a lot of business owners. We deal with a lot of publicly traded companies. And we work with people who are entrepreneurial spirited, and we make sure that their business decisions that they make flow very effectively into their personal affairs. And it's really important, because you could be an incredibly successful entrepreneurial spirited individual, but if you don't have the right structure, you don't have the right vehicles in place, whether it's a business vehicle, a corporate, LLC, C Corp, whether you're doing whether assets are in a trust, what type of trust, irrevocable versus, revocable, all these things fall into place. Whether it's saving for college versus putting it in a custodial account to a 529, it's really these decisions that you make. We're there to help to make sure that the flow of the hard work that you do, which comes down into the net and what you save, basically flows effectively into your personal matters. Go ahead, Serena. You could actually pass that. Our goal-based planning, and you could pass that. Our goal-based planning, you could actually go back to goal-based. It's really the same thing. We listen, we're going to repeat, we're going to advise, we're going to implement, and then we're just going to talk to you. And again, if you're not working with us, that's what you should expect from your advisor. They know you, they've listened, they implemented a strategy, and they're held accountable to that strategy, and they're very transparent on how much they charge, what your risk is, what investments you are, and just the progress and how you're doing based on what's going on in the world. You can go two forward. I mean, you guys are in the real estate market. You understand all the solutions that are available out there. So you can go past lending. So when I think about everything and we're thinking about what your needs are and what our solutions are, we have the capabilities of Morgan Stanley to work with you in whatever capacity you want, whether it's setting up a SEP IRA, 401k, saving for your kids. Again, there are no bad questions. We're here to help. This is a partnership. We believe in the NAHREP 10. I actually live it. We believe in the Hispanic Wealth Project, and we just want to see you. I personally, at 57 years old, I want to see my kids have a bigger seat at the table. What's going on? And the only way to do that is to help us all become extremely affluent. Thank you.
Jim, thank you so much. Your presentation was extraordinarily eye-opening. The slide which demonstrated the effect of compound interest, I mean, that should be a big eye-opener for anybody who is just starting out in the business and is considerably younger. I mean, it just is astounding how we really need to concentrate on planning properly, because many of us are independent contractors and we don't have employer funded or matching 401ks. And it's easy now when things are well, but when things get a little harder later on and the income stream is not there, of course, we may look back and say, I wish I had done X, Y, and Z. So thank you, Jim, for bringing that to our attention and helping us to think ahead. Very great presentation. Everybody really think about what your life goals are. And again, we're here to help everybody create wealth, save, and that way we can all have a more enjoyable future and plans for our family and our friends. Our family is really the core of everybody's household. So thank you once again, Jim. I thank you very much, Chris. You're off screen now. I hope everyone had some good takeaways from this evening's presentation, and we hope to see everybody soon. We're planning something really exciting for October. Stay tuned. We hope that the pandemic and vaccination will allow it to happen, and everybody be well and good night. If anybody has any questions or needs to reach out to any one of our speakers, and you need their contact information, again, please don't hesitate to reach out to us. Thank you once again, all.
Thank you. Thank you for the opportunity. We appreciate it. Stay safe, everyone.